All right, that's the take coming in on the IT space. Let's watch out for that. But Sandeep, just wanted to have your take on the pharma space as well, because it's a fresh 100% tariff that has been announced. But the good part is that's on the branded side. The generic side has didn't have any mention to the post. And seems like that the Indian pharma companies can do well, at least in the announcement so far. But select companies like Sun Pharma, Biocon, they will be in focus. What's your analysis on that, Sandeep?
To some, it's a slightly vague announcement because it says branded and patented. So is it only branded, patented, or branded separately and patented separately? So if it's both, then some of the companies who are doing branded generics also could get impacted, and companies like Lupin, Sun, and some others, like all these larger Indian generic companies have some amount of branded generics also. So then to that extent, if they don't have any manufacturing setup in the US, that could get impacted, but the impact will be lesser. Now, another case in point which needs to be analyzed is how it impacts the CDMO companies, because the CDMO companies start off with the initial development, but then they tend to make a big amount of money when they actually the drug comes to the market, the branded patented drug, and then they supply that those drugs to these large pharma companies who sell them as patented branded products. So I think that's where the greater impact could come, and that's something which is not getting discussed. So I think the CDMO sector has been in fancy. Many of these companies are very highly valued at this stage. So that's where the impact could be greater if their supplies get impacted because of this.
Absolutely. And Sandeep, welcome back. So good to be chatting with you. What is it that you've been buying and selling in the last 2 months? Curious to know.
So largely auto stocks is something we have been positive on. So that's where we actually bought into Maruti, and M&M is something which I have held for a long time, and Bajaj Auto is something we have been accumulating. So among the auto stocks, that's the one which has still not participated as much. Like it participated, then it corrected. So I think that's where some value could lie, because they also have a significant export component which gets hugely benefited by the rupee depreciation. So that's some segment. That's one segment we've looked at. Then on the consumer side, I think there are opportunities, because I believe at least on the consumer durable side, there could be some uptake. So we've been getting into small quantities of companies like Havels, V-Guard, among others.
The other big, of course, news other than pharma is also some of the tariff impositions which are coming on, kitchen building materials, as well as the component makers here in India who do supply to commercial vehicles in the US. Case in point being Bharat Forge, which is a component supplier to the Class 8 trucks in the US. That perhaps could be one stock which could be on the radar today and may see some pressure perhaps as well. But other than that, Sandeep, the one intriguing point, and you've also, talked about it, is the kind of IPO rush that we are seeing in the market. While we're all obsessed with the FISL figure year to date, what we're not seeing is the FPI money which is finding its way to some of these overpriced IPOs as well. What's that trend telling you, Sandeep?
I think, Aisha, like you rightly said, I think the bigger reason why Indian markets have not done well is because of this IPO rush. Globally, nowhere else we see this kind of rush of IPOs. In fact, if you actually analyze the US markets, on a net basis, the buybacks have exceeded the amount of IPOs which have come. So actually, net equity has actually gone out of those markets. In India, the supply is very huge. Most of these IPOs are much highly valued than either peer group listed companies or any listed company. But they get lapped up because there's so much of demand, and then those stocks move up further because they show less liquidity. And so there's lesser and lesser interest in the secondary market because as it is, it's not done as well. And there's more interest in IPOs. And the kind of IPO rush we are likely to see next 1 month also. I believe there are 25 main board IPOs. I don't know how many SME IPOs planned over just the next 1 month. So with this kind of supply, it's tough for the overall markets to perform because any amount of inflows which are happening into institutional funds like MFs, AIF, PMSs, etc., most of it is getting diverted into the new IPOs.
Sandeep, you've never been an IPO fan, but anything that you've subscribed to?
No, I haven't. Because, see, once you get into that trap, like you don't believe in the valuation, but you're just applying into it because you think on a listing you'll get a pop, then you get into a trap where your fundamental convictions and a technical, whatever money making scheme, what you are trying to do, it gets so mixed up, then in the end, you don't really know what you're doing. So some of these IPOs will become maybe decent buys on corrections whenever there is a big drawdown at some time in the future, as we've seen in the past with some of the IPOs which came at very high prices, fell drastically, and then they became reasonably valued, but not right now.